What's up, guys? Stas here. So the stock market's about to close, and unless anything crazy happens, like the Fed pumping in another $1 trillion right now, we're going to have a red day. S&P 500 down 0.8%, down $24. Dow Jones down $106, 0.43% in the red, with the NASDAQ down $108, down 1.15%. And in this video, we're going to break down the markets a bit further, taking a look at some technicals, and I want to share with you all what are the top stocks right now that I'm watching, what am I looking to trade in May of 2020, as well as what I've been doing in the markets, swing trading, day trading options. I want to tell you guys everything in this video. So if you enjoy it, hit that like button, consider subscribing, and let's get right into it. So going to the S&P, again, it's a red day here, guys, with about 3 minutes left in the session, and it seems like we're going to close, unless we get a little pop here, which is possible, but it seems like we're going to close under 2950, right under 2950, which is a level of resistance, right, that we need to close above from a bullish perspective, right? And although it seems like we're going to close below it, it's not the end of the world, guys, because ultimately the uptrend seems like it's still intact, right? If we pull on this 90-day chart, 90-day 2-hour, it seems like it's intact, right? Despite us closing slightly below 2950, and you can see that even better on the 30-day chart, right? Take a look at this trend line. It's still intact, right? So for tomorrow, 2950 yet again is going to be a pivotal point on the S&P to determine direction, right? Because if we pop above it and slowly test 2980, which was the high from yesterday, we might end up hitting 3000, right? That's kind of the golden target on the S&P right now, since it is the next gap above 2950. And you guys can see that on this 90-day chart. Notice how 2950, huge resistance. The next gap would be 3000, right? So keep an eye on the direction which the S&P picks tomorrow. And mind you, tomorrow is Friday, so Fridays could be funky. You know, it could be a big red day tomorrow. You know, we might end up rallying up. We'll end up seeing what happens, but ultimately direction is going to be key for the S&P, right? And when it comes down to the Dow, take a look. Just like the S&P, we're huddling right under the main moving average, or rather the main resistance, which in this case is going to be $24,700 to $800. And I've said on the channel before, right? Watch for the break. Watch out above. You know, if the Dow breaks, excuse me, guys, you know, 24.8, this thing could run all the way up to 25.8, which would be a $1,000 pop, and that could be a move of around 4 to 5% on the upside here, right? Especially since we are seeing some bullish momentum as we did break out of this wedge, right? We broke out of this wedge, and if I drag it down a bit, you can see it, right? Bullish break there. Now, all we need to see again is a 24.8 break, 24.6, 7 break, and then we could get into the 25,000 range there on the Dow Jones. And when it comes to the NASDAQ, guys, down 106 points here, we can see we closed above a pretty critical level of support, being around 93.50, 93.40, right? Notice how that was a resistance from back in the middle of May, about a week ago. It was also a resistance from the 18th of May, so that's a pretty good close here for the NASDAQ, despite having a red day. And guys, you know, people are saying, oh my goodness, we're having a red day here. There goes the markets. The markets are falling down now. No, this is simply a healthy pull down based on the technicals that I'm seeing, especially here on the NASDAQ, guys. The NASDAQ being the most kind of hot, I guess you can say, index now. The tech stocks have been crushing it. Big tech, you know, the FANG stocks and Microsoft have been carrying the market. So it makes sense that the NASDAQ has been crushing it, and a pull down is healthy. The uptrend is still intact here from the low at 6,700, and that's kind of what I'm seeing here, right? So for tomorrow, watch 93.40. If we break, we could end up filling the gap down to, let's say, 92.50, and at that point, if you're bullish on the market, right, we could play, you could play TQQQ, which is an ETF that tracks the NASDAQ. It goes up whenever the NASDAQ is going up at a 3x rate. So that could be an opportunity, but as always, do your own research, guys, your own due diligence. Don't buy anything based off of me or anybody else. And when we take a look at the SPY, this is a S&P 500 ETF. Notice how we closed above the 50 SMA on this 2-hour chart. We're right around that 294, 295 resistance. So we're at a critical spot, especially on the S&P 500, guys. And you can notice here, we popped a little bit earlier today, sold off, ended up consolidating at about 294, 295. So it was a really rocky day out there, to say the least, and I'm excited to see what tomorrow ends up bringing. And in terms of jobless claims, that's been the key number every Thursday that we've been paying attention to, right? Ever since the whole CV craziness, we got 2.44 million claims for this past week, and that brings the total filings during the CV crisis to about 38.6 million. And by next week, guys, at this rate, we should be at 40 million jobless claims in the past, like 8-9 weeks. That is just unbelievable. Realize that the population of the U.S. is like 330 million or 50 million or something like that, and there's been 40 million jobless claims, and who knows how many other people that haven't gotten through are left, right? There could be 60,000, 70,000, who knows? The unemployment rate could be 30-40% for all we know if we had the exact statistics that were 100% correct. At this point, who knows, guys? So it's a crazy, interesting time we're living in here. And take a look at that volume now that I'm looking at this. Take a look at that SPY volume at the end of the day. That's pretty crazy. Shares are exchanging hands a lot heading into the close here for the S&P 500 ETF. So I'd love to know what you guys have to think down below in the comments. As always, any thoughts on the markets, jobless claims, the trend, technical analysis, I would love to know down below. Now, let me take a quick little sip of water. My throat's, I don't know what's going on here today, guys. Had to clear the throat up a little bit there. But now let's get into what I've been doing in the markets. Today was a pretty interesting day, to say the least. We had a pretty big pull down across many stocks, and an ETF in particular that I was watching for an entry point is GDX. And this goes to show, guys, patience pays off. When you're looking to swing trade something and you have a target price, and in this case, mine was about 35.50, and it hits that price and you strike, that's the name of the game, right? It's all about having a price target, not forcing it, not buying too early, but sticking to the plan. And if all goes correct, that's how you get rewarded at the end of the day, right? And in this situation, right, we got a pull down from $38 on this gold miners ETF. And I noticed yesterday, guys, we were seeing some consolidation at around 37. We were struggling. We closed down. We downtrended into the close yesterday. And I was hoping that today we'd get the pull down, right? Because on the 20-day chart, notice how this area we pulled down to is right by the 180 SMA, and we got exactly that, right? I was hoping for it, and we got it. And we got the pull down to about 34.70, I think was the low of the day. But I actually ended up getting in a bit early, one would argue. But I'm actually green on the position now, believe it or not. I actually bought in initially this morning at around 35.85, and then I actually added more to the position at 35.05, right around here on this kind of this last leg down. I added a bit more, and that's bringing my average cost at this point to about 35.40, I believe it is, because I did go a bit heavier down here as the price got to my target right around 35 bucks, right? As I said earlier, have that plan execute. And at this point, we notice how it's continuing to push up. It's kind of recovering into the close on the hourly chart. You guys can see that as well. So at this point, guys, I'm green on this GDX position, and I plan on actually swing trading it for a couple days here at least, right? My goal exit price is going to be at around $38, and that could be a profit of about 6%. And another move that I made here today was I bought some GDX calls. You guys remember yesterday I was looking at, what was was it? The $40 September, what was it? September 18th call option for GDX here. A lot of open interest on that, a huge amount of open interest, and that typically shows you guys, popular options out there that people think could end up, making a lot of money, right? So I ended up buying a couple contracts there across my accounts, just slowly averaging into those, since I do believe over the next couple of weeks, months, GDX is going to go higher, right? That's just my belief. The gold stocks, I think gold is going to do well here in the short term, especially with all the money printing and so forth, quantitative easing. So I feel like having some option exposure here gives me a bit of a leveraged position in GDX, and if I think it's going up, right, I'll make a pretty good amount of money, using options, which again allow you to leverage your money at the end of the day, because one contract gives you control of 100 shares, right? It's an awesome thing if you understand it. And quite honestly, guys, I'm not here to paint a picture like options are easy, right? They're not easy. They're very hard, quite honestly. And if you guys want to see, a WeBull options video where I go over basics on how to buy call options, put options on WeBull, check out that link down below in the description box. And while you're at it, guys, you can get 2 free stocks, with one of them valued up to $1,400 if you deposit $100 into the account with that affiliate link down below. So that's what I ended up doing, guys. GDX, calls and shares here. And I was actually looking at EA, but we'll get into that in a couple minutes here. I didn't pull the trigger on EA, but I'm looking to get back into this particular stock here. So let me know down below in the comments, guys, what are your thoughts as always. Now let's just get into what other stocks I'm looking to trade. And now that we're on the topic of EA, we might as well just start here. Electronic Arts, this one showed a pretty bullish momentum yesterday as we broke out of 119, 120 into almost $122 per share. That was extremely bullish in my eyes, as that has been a resistance for the past couple of weeks here, about a month and a half. So the fact that we broke out, that was good, right? I actually sold out of EA yesterday, locked in some profits, and I'm pretty thankful I did that, because now I can get in at a better price on this dip, right? And we noticed how we're actually back under 119, so it is a resistance yet again, but we're also maintaining this uptrend, right? Notice how we're maintaining the uptrend, the 50 SMA on this 4-hour chart, and we're back in a wedge, right? So at this point, what direction are we going to pick? Ideally, if we hold 117, 118 and consolidate and slowly move back up, that could be an entry point. And if we break 120, 119, obviously that's where the profits are going to come, right? And me personally, bullish video game stocks, I think that's going to happen. So I'm just being patient, waiting until tomorrow to take a position. But anywhere 118, 119, I think EA is a pretty decent buy here. And another one I'm looking at is NIO, ticker symbol NIO. This is one that I actually own in a long-term account as a speculative investment. But looking at it from a trading perspective here, we actually opened up a pretty nice window of profit potential, right? We pulled down from about 370, 380 down to about where we are now at about 330. So that's roughly a 10-11% profit potential opened, and it seems like we're in a textbook horizontal pattern at this point. And notice how NIO is reporting earnings here on the 28th of the month, which is actually 2 days before my birthday, fun fact, and that's in about a week. So in a week from now, NIO is most likely going to be going like this, up, down, up, down, up, down, bananas, because whenever this reports earnings, guys, it's just volatile. That's just the nature of the stock. And ultimately, next week, just watch 330, or for tomorrow too, and next week, I'm watching 330, 340, and looking to see if we can catch some sort of move back back up here. And another video game stock I'm watching, kind of in a similar position as EA, is Activision here. We went down about 2% today, down $1.31. Notice how on this, let's see if we can see it, on the 90-day chart, we're noticing a pretty strong resistance at, let's say, 73, 74 bucks. So I'm just looking to see what we do at that point. Let's say we test it again, because it's clearly that, clearly we're in a horizontal pattern between 72.30 to about 74 bucks. So if we hold 72.30 tomorrow, this could be a short-term move back up, but watch for the break at 72.30, because it looks like that could happen as well. And at that point, we might get a blessing in the short term and get a $70 entry point, which would be a nice entry point as well if you're looking to swing trade it. And again, guys, do your own due diligence on these stocks. I'm just giving you guys my opinion. I think 70 bucks would be a great entry point in the short term here for Activision, ticker symbol ATVI. And another one here, pulling down a bit, hit a high at 300 a couple days ago, or it might have been yesterday, is MasterCard, ticker symbol MA. We actually pulled down about $5, down 1.5% today, and it seems like we closed above a pretty critical support. Old resistance at 295, we held it as a support. That's a pretty good sign in my eyes at this point. So is this a screaming trade? Oh my goodness, so much money to be made. Not really, but from 295, we could be seeing some potential back up to the 300s, right? As we saw the all-time high for MasterCards at 340. Not saying it's going all the way back, but from 300 to 320, 315, 310, I think it's possible, and that could offer, let's say, 5-10% profit here. Maybe not 10%, more like 4 or 5% in the short term. So just watch out, but if it breaks 295, guys, I think it might go back down to 288, 290 based on this chart, and that could be a head and shoulders forming. Watch out for that too. We have a left shoulder. This could be the head. If we pop and break 290 tomorrow, 280, we get back down there, that could be the right shoulder. So be careful and be mindful of that. And another one that's just done great today, and it's kind of been proving me wrong, is Boeing, ticker symbol BA. I mentioned on the channel a couple days ago, I think Boeing's going down. I'm not really looking to buy into Boeing. And obviously, guys, you can't predict everything. That's impossible. But based on the patterns, I'm a big technical guy. When I said that, we were right around here, right? We were pushing down. We actually broke the support of this wedge, which was very bearish at the time. But since then, you guys can see Boeing's recovered a lot. From 118, it actually cracked 140 bucks today. We broke moving averages here on the 2-hour chart. We broke above the top of the wedge, the resistance. So, although I said that, I was wrong, a couple days ago or whenever that was. Although I did say that, the technicals are proving me wrong. We're running back up here on Boeing, so watch out for it, guys. And is this because the business is turning around and doing great? Of course not. It's because of the stimulus, guys. At the end of the day, if Boeing didn't have stimulus, the stock would definitely be under, in my opinion at least, $100, right? At least $100. And same thing with the airlines, right? It's pretty interesting. A lot of the bailout money is going to the airlines. I forget how much exactly. I think it was, like 25... Was it 25 billion? It might have been 25 billion. But the interesting thing on the airlines is, guys, look this data up online yourselves. And I personally got this from a Valuetainment video. Patrick Bet David, I love that dude. I love that channel for business in general, entrepreneurship, interviews, and so forth. Great channel. Go check it out. It has like 2 million subscribers. But he was going over how the airlines, their typical days for traveling, the typical number of people traveling in a day at its peak before this whole craziness was around 2 million, 2.5 million. And right now, the number of people traveling right now, literally May 20th, is 150,000, 200,000. So their business pretty much got cut by 90-95%. And the funny thing is, the stock price hasn't been cut by 90 to 95%, although the business has. The number of people flying. Take a look at the stock prices for many of these companies, right? UAL, is it down 90% from its peak? No, it's down about, 70%. That's pretty terrible. But let's say DAL, for example, is it down 90-ish percent? No, it's down about 60, 50%. So if there was no, I'm trying to make a point here, if there was no bailout money, Boeing would definitely be under 100. These airlines, a lot of them would be down 90% from their highs because the stock price would reflect the actual fundamentals. But yeah, at the end of the day, guys, the stimulus, the bailouts, that's what it does. It props up the stock price, and you have to live with it, right? It's either like, you're going to fight the Fed or you got to join them, right? And at this point, it's for the little guys out there, it doesn't make much sense fighting them. The smart thing, in my eyes at least, is to trade the trend and kind of be smart with how you maneuver, based on the actions of the Fed and so forth. And that's some food for thought, guys, with these stocks that have been hurt, these companies that have been hurt. A lot of the bailout money is obviously propping them up at the end of the day. And some other companies that did quite well, Home Depot up about 1.13% today. We're pulling down, holding 236, 240. This is a very good sign for the bulls. Uptrends holding on the 4-hour chart. So I'm watching to see tomorrow, maybe Monday, do we fill the gap up? 245, 248, could be around 2-3% profit here on Home Depot. That could be maybe a short-term trade. Lowe's is another one. Maybe not as attractive as Home Depot at the point where it is right now, but still up 3%, up about $4. This one's looking quite solid in my opinion, especially on a pull down here. And take a look at Square, guys. Square was actually momentarily under, I think, $80 today. Let me know if you guys end up buying the dip on Square today. You guys can see we pulled down to about 78. And take a look at what happened. We actually held an old resistance, 78, as a new support. We pushed up, so that's a good sign, right? Because that's confirming a higher low here on the uptrend. But notice how we closed under $82, which is a resistance. So this level, in my eyes, resistance from a couple days ago, multiple times, it needs to break on Square. And from that point, guys, 82, $83, we could be rallying back up to the high 80s on Square. Ticker symbol SQ, so definitely take a look at that one. And Tesla's another one here, ticker symbol TSLA. What did I say, guys? It's squeezing in this horizontal pattern. We talked about this yesterday between 790 and 820, and it almost did break out of there. It kind of did earlier in the day. We saw a huge surge in the stock up to 830. Now we're pulling down after hours, looking to hold 820 as a support again. So just watch out, guys. If Tesla's able to break 820, or rather, hold 820, 830 and rally up from there, I would not be surprised if we hit 900 and heck, even $1,000 per share on Tesla. I would not be surprised because, guys, the stock market is a bit irrational right now. Let's be honest. Shopify hit massive highs. Shopify is almost at 1,000. It's at $800 a share now. CMG just cracked 1,000. Now it's at 1,030. Spotify with the Joe Rogan deal, $100 million, right? This stock is up a massive amount, up almost to $200 per share now, and it was $100 literally about 2 months ago. So some stocks are just up in a straight line. It's just insane, especially Spotify here. And this is definitely one I'd be careful of. I'm not looking to buy Spotify by any stretch of the imagination. I'm leaning more towards Tesla, EA at this point. Even NIO, right? I think NIO has a lot of potential. And another one here is Nike, ticker symbol NK. We talked about this, and again, not to toot my own horn, I hate doing that on the channel, but sometimes I like doing it too, I'll be honest. But we actually broke out of 93 or $90, 91. We talked about this, right? We were trading in a textbook horizontal pattern here from 85 up to 90, 91, up and down for a couple of weeks. And we finally picked direction. The second we broke out of 91, that would have been a sign to buy. Did I buy? No, I'm slapping myself. I'll slap myself right now. Boom, I slapped myself. I'm slapping myself, guys, because I didn't buy the stock. But you can't win everything. That's just the reality of it. You can't win every trade, even if you plan for it. You can't, because if you're looking at something, one thing here, time gets away from you, right? Let's say you're in a position, the move gets made behind your back. You can't go back in time and buy, right? So this is kind of one that I missed. But either way, I'm watching it, and we still have more potential, guys, quite honestly, because 95 could also break, and we might see a rally back up into the hundreds. Who knows? But, at this point, I think we'll cool off a bit before seeing that rally into the hundreds. That's just what I think, at least. So overall, that's it for the video, everybody. If you enjoyed it, as always, hit that like button for me. Consider subscribing to the channel. And again, if you want 2 free stocks from WeBull, one of them valued up to $1,400, check that link down below in the description box. If you put in $100 into the account, you get 2 of those stocks, again, valued up to $1,400. I'll catch you all in the next video. Stay safe out there. As always, peace out.